Hi there traders, this is Steve Miley, the market chartist for FX Explained, and now one of our regular weekly MacroWatch updates for the week commencing the 15th of February 2021. Stocks grind higher, US dollar trying to turn back positive. So first of all, we're going to take a look at the macroeconomic and geopolitical developments over the past week. Well, it's been a fairly quiet week in the markets. We've had very little, in fact, effectively nothing really significant on the central bank side. We've had very light macroeconomic data, and earnings season now drawing to a close in here with most of the major names, the large corporations already reported. So we had very negligible impacts on the macroeconomic and geopolitical developments in here, but we'll take a look at what we have had in here. And the Democrats' COVID relief bill has seen limited progress, again with the Senate sitting for the impeachment trial in here of Donald Trump, and that impeachment trial came to a conclusion at the weekend with Trump acquitted. So that does at least clear the program in here for the Senate to take a look at the COVID relief bill. We also have vaccinations are continuing at good pace and good speed in the UK, but with Europe starting to gather some pace in here. So that's obviously a positive too, not just for the European economy, but for the global economy. And the lockdown measures that are in place alongside the vaccination programs that are being rolled out in here are having a positive impact, with COVID-19 cases, hospitalisations and deaths in Europe and also elsewhere in the US and around the world globally significantly falling in here since the beginning of the year. But the UK and Europe remain very much hesitant to ease current lockdown measures. We are expecting announcements from the UK, not this week coming, but the week after. And we're also looking for Europe to maybe develop in the European situation to develop. But at the moment, very much the lockdown measures very much in place. A lot of caution across European nations in here. So let's take a look at the global financial market developments in here for last week, ending the 12th of February. Well, equities were grinding higher. We had that sell-off at the end of January with the whole Reddit, GameStop frenzy, and then the rebound when that lost steam. So we saw that sell-off and rebound through the early part of February. But in the last week in here, the market in here, the S&P 500 just about grinding higher, making new all-time highs in here, but just on a more of a grind. And similar for the European equity indices in here, that sell-off and rebound late January, early February. Market hesitant through much of the last week in here, and it was only at the very end of the week here that the Euro stocks popped to a new multi-month high, its highest point since February of last year, February 2020. On the dollar side in here, the dollar index has sold off in here. That corrected the strength that we've seen in 2021. We've seen a negative US dollar correction, but the market's trying to stabilize through the middle of last week from Wednesday through Thursday and actually tried to rebound here. So the dollar trying to rebound across many of the major currencies in the second half of last week, having suffered significant losses at the beginning of last week. But the underlying theme of US dollar strength at the beginning of this year does stay intact. And we see that dollar strength in here staying intact with the dollar yen selling off again at the beginning of last week, but Wednesday through Friday last week did manage to stage a rebound, and the bigger picture 2021 US dollar versus Japanese yen recovery is certainly intact in here. The pound stays very, very, very strong. We did get a dip a week or so ago in here after the Bank of England, or into the Bank of England, sorry. We had the dip and then we saw the bounce after the Bank of England, and that bounce extending into this week with the market now pushing itself to another new multi-year high above the 138.00 level. The pound staying strong here against the dollar, and then the pound also showing its strength elsewhere with euro sterling in here pushing back lower in here at the very end of last week, having succumbed to significant losses since December last year and particularly through early 2021 through January. In the commodity space, oil has extended its very strong move that we saw at the beginning of this month for the first week. We highlighted that last week, and then continuing that bullish breakout. From the middle of last week, we did see a slight consolidation, but a really strong end to the week last week in here with the light crude oil future in here getting close to $60. Copper again has shifted more bullish, having been in a sideways consolidation since December. We did make new, multi-month, multi-year highs in the very beginning of 2021, and since then the market's been more in a negative consolidation. But the last week and a half, 2 weeks, has seen a very bullish rally in copper, taking out that 2021 high and pointing still higher. And gold in here, despite rebounding as we saw those US dollar losses in here for the first part of last week, rolled back lower at the end of last week, Thursday through Friday, and gold remains vulnerable to some of the losses that we've seen in here from the beginning of 2021. So let's take a look at the week ahead, the week commencing the 15th of February 2021. Well, it's President's Day on Monday in the US, and that means US markets are closed, so expecting a quiet day, particularly as we also have the Lunar New Year celebrations in many Asian markets, with many Asian markets closed, including China, between Monday and Wednesday of this week. So Monday looking to be a particularly quiet day with the US President's Day holiday and many of the Asian markets closed. We've also got some the Democrats looking to progress the COVID relief bill from President Biden, expecting that to make some ground in here, hopefully through this week. And we're also monitoring for possible easing of lockdown announcements in Europe and in the UK. COVID-19 cases, hospitalisations and deaths stay in the spotlight as ever, and we'll be monitoring the falls that we've seen more recently in here in 2021, looking for those to extend through mid-February. And also monitoring for new vaccine rollouts, new announcements of further vaccines, approvals of vaccines, and how the whole vaccine programs are being met in here, how the programs are being initiated throughout the major economic regions. On the central bank side in here with our central bank watch, we have the Reserve Bank of Australia meeting minutes on Tuesday, and then we have the Federal Reserve, the FOMC meeting minutes coming up on Wednesday. And overall, it's a relatively quiet week in here. As I say, those holidays in Asia and in the US on Monday. Those Asian holidays are running through to Wednesday. We do get Japanese GDP and industrial production alongside EU industrial production on Monday. Tuesday are those RBA meeting minutes alongside EU GDP and German ZEW survey. On Wednesday, we get UK inflation data, US retail sales and Canadian CPI alongside those FOMC meeting minutes. We get the Australian employment report on Thursday with the weekly US jobless claims data. And then we finish off the week with UK retail sales and probably the most important data of the week, the global market flash manufacturing and service PMI data coming throughout the day on Friday the 19th of February. I'm going to wish you all a great trading week. Please do stay safe out there, and I'll be back with you with another Macro Watch very soon. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.